Okay, you are welcome to today's class. We shall continue from where we stopped on relevant costing. I took my time in the previous class to explain what is relevant costing, and we look at the concept of relevant cost and the things that can be described as relevant cost, where we looked at incremental cost, differential cost, avoidable and unavoidable cost. All right. Then we also looked at how you can identify relevant cost, and there we discussed that relevant cost can be identified through cost components, which are materials, labor, and overhead. These things were discussed in detail, whereby I supposed you would have a perfect understanding about this. I hope you're there. Then I did say that we are going to take a question in our next class, and that is today. So this is practice question 1. So it reads thus: Nigeria Limited is an engineering company that specializes in building engines for grinding machines. One of the components for building these engines is sourced from Toka Nigeria Limited, a company in the same group with Tadex Nigeria Limited. Each component is transferred to Tadex, taking account of Toka's opportunity cost of the component. The variable cost of Toka is 280 naira per component. A prospective customer has approached Tadex to submit a quotation for a contract to build a new engine. This is a new customer to Tadex, but directors of Tadex are keen on winning this contract, as they believe that these may lead to more contracts in the future. As a result of this, they intend pricing the contract using relevant cost. The following cost data is given in respect of the contract. I. Production director of Tadex is on an annual salary equivalent to 15,000 naira per 8 hours a day. The materials needed for contract are 110 square meters of material A. This material is normally being used for Tadex, and it has 200 square meters in stock. These were bought at a cost of 120 per square meter. They have resale value of 105 per square meter and replacement cost of 125 per square meter. 30 liters of material B. This material has to be purchased specially for this contract, and the minimum order quantity from the supplier is 40 liters at cost of 90 naira per liter. Tadex has no use for this material after the contract is executed. 60 components will be purchased from Toka at a purchase price of 500 naira per component. A total of 240 direct labor hours will be required. The current wage rate for the grade of labor that will work on the contract is 110 naira per hour. Tadex currently has 75 direct labor hours of spare capacity for this grade and are being paid under collective wage agreement. The additional hours required will be sourced by either 1. Overtime at cost of 140 per hour, or employment of temporary staff at a cost of 120 naira per hour. But these temporary staff, because they are not experienced, will require 10 hours supervision by existing supervisor, who would be paid overtime at rate of 180 per hour for this contract. 25 machine hours will be required. The machine to be used is already leased at a weekly lease rental of 6,000 naira. It has 40 hours per week capacity. The machine has sufficient available capacity. The variable cost of running the machine is 70 naira per hour. The company fixed overhead absorption rate is 200 per direct labor hour. You are required to calculate the relevant cost of building the new mesh engine and explain why you have included or excluded any cost in your calculations. Discuss the factors that will be considered by TOCA to determine the opportunity cost of the components. Now, this is where we are, and we now have to look at the solution. Now, this is the solution of the question. Now, before the solution, there is a workings, and this working is important, and we shall look through it for proper understanding before we move down to the solution. Now, working number 1, I explained. He said the production director is on a salary of 15,000 naira per hour. You see, that was what the question said. I said that. And whether the company accepts the contract or not, the production director's salary will still be paid. Hence, it is not a relevant cost. That is why nil value was attributed to it. So now, production director is already paid a salary. So once you are on a salary and you have spare time, you can do other work for us. So it mustn't be what we employed you for. So that is why, since he has a spare time, that he uses in reading newspaper every day while in the office, so we can actually engage him productively, since he's free to do the job for us, and we won't pay him anything. So the relevant cost of our production director doing that job that we have is nil, because he is already on salary. So whether we accept the job or we don't accept the job, we will still pay him salary. So it is not relevant. Now, if you go to the solution, look at it. Production director salary is nil. And remember when I was telling you that when you discuss about relevant cost and you look at salary, I said salary is not a relevant cost, because the worker will be paid salary whether he works or not. In fact, we can even stress him for working more for us, even overtime. Some companies do it, you work overtime, they will not pay you. You see, I'm a testifier of this. So that is that for that. So we'll now move to working number 2, material A. Material A is in regular use, and remember what I told you. And the relevant cost is the replacement cost and not the resale or historical cost. Now we'll come back here. Look at it. Material A. We needed 110 square meters of that material, and the replacement cost is 125. So you will not use historical cost. Neither will you use the other cost together. What you use is replacement cost. You can revisit the question. The materials are with you. You can also read and solve at your own time. Now we'll move to working number 3. Material B is a one-off material. What do we mean by one-off? It's something we will use just one time, and after using it, we are no longer going to use it again because we don't need it. You understand? So it is a one-off material. Now, since it's a one-off material, I said, and will no longer be used after this contract, and it is sold in batches, and hence the company must purchase the batch in order to meet up with the customer's order. So now we needed, I think, 30 of this material, but the material is sold in batches. I think it's sold at, let's look at the question again. Look at it. We are there. We needed 30 liters of material B, but it is sold as a batch, and the batch is 40 liters. So we must buy it. So the 10 liters remaining, we'll dispose it because we don't need it. So the cost of the relevant cost is the cost of the batch that we must buy. So which is 40 times the current value, which is it? Look at it, material B, 40 times 90 naira. So that gave us the relevant cost. I hope you are understanding it. So it is relevant because if we don't do the contract, we won't incur the cost. But if we do the contract, we will incur the cost. And remember the definition of relevant cost. Relevant cost is that cost that will be incurred to do a job or a work or produce a product as a direct consequence of taking what? A decision of doing that job. So we'll now look at the next item 4, which is component. Now this company is a group company. You are doing group accounts. A group company is a company that has more than one company inside. For example, we know of Dangote. We have Dangote Cement. It's a company of its own. We have Dangote for the daily foods. Now we have Dangote Oil and Gas. So this is a group account. Now Dangote Cement can be procuring gas and fuel from Dangote Oil and Gas. So, and Dangote Oil and Gas will not be selling this product at cost to Dangote Cement. They'll be selling it at a margin, probably, as the case may be, depending on management policy. But be that as it may, now in this scenario, in this question we are taking, Dangote, Tadex has a company that supplies its a component, and that company is a member of their group, and that company sells their product at opportunity cost. I did take my time to explain what opportunity cost is. So now I read it, what I explained. I said the component from a group member is supplied at opportunity cost. That is benefit lost. And 500 is supposedly the market price of the component, and Toda must recover the contribution lost. Hence, the value was 500 naira and not 280, which is the variable cost. So we'll come back for the components. You see there, components from Toda, 60 times 500. So the reason why we use 500, because 500 is the opportunity cost. Now, we move down to labor. I also explained. Look at it here. The company needs 240 direct labor hours. In that regard, there are 75 square direct labor hours available, and there are 75 spare direct labor hours available, and this spare hour will not be paid for at all. Hence, new value was attributed to it. Remember what I told you. If our workers is on salary and they have spare time, we cannot pay them again because we pay them actually for doing nothing. Then the relevant cost of them doing that job or work is nil. So let's revisit the solution. Look at it. 75 direct labor spare capacity is available, so it is nil. I said direct labor hour, 240 direct labor hours are required, so 75 is available, so it's nil. Now the remaining 165, how did we get 165? 165 was gotten by saying 240, which is the labor hours required, minus the spare labor hour, which is 75. So we will have to pay for this 165 hours. Since we needed 240 hours and we have 75 available, so we won't pay for that because it's an irrelevant cost. So 165 will be paid. And how do we pay it? We can either pay it by encouraging our workers to do overtime, or we employ temporary staff. Let's look at their cost. If our workers are doing overtime, we're going to pay them 140 naira per hour, and the cost will be 23,100 naira. Now, if alternatively we choose to employ temporary staff, we'll pay them 120 per hour. So 120 times this plus due to they are new, they would need a supervisor who would oftentimes be going through what they are doing and supposedly make corrections where necessary, and at the same time tell them what to do. And who will pay this supervisor 180 naira per hour, and this supervisor will work for 10 hours. So the aggregate of this temporary staff cost will give us 21,600. So you take the least, we are cost conscious. So you take the least cost, and the least cost will be 21,600. So that is the relevant cost of paying for the 165 hours remaining. So this is the relevant cost. That's why we brought you to the S3. You understand? Then we'll now move to our machine hours. I think I did explain that too. Then they said the lease amount to be paid whether the contract is executed or not. Hence, it is not a relevant cost. Now, the machine we will use for this contract is already leased. Therefore, if we do this contract or we don't do this contract, we will definitely pay for that leased rent. However, the running cost is relevant cost. So what is the cost of running that machinery? We'll now revisit the solution, and it says it is 25 hours and the cost per hour of running it is 70 naira. So remember, when I was explaining, I did say the relevant cost, variable cost are relevant cost as the case may be. So we have this, and that is all about this cost. So when you total it, you have 70,700. That is the relevant cost of doing that contract, and that is it for that. I hope you understand. Okay, that really makes sense. Now I'll give you time to look at it and ask your questions. There are other 3 questions in the material. Look at them and you can ask your questions on WhatsApp group chat. Then we move to break-even point, and that is CVP analysis in our next class. Thank you for attending.